Retail investors bought $100 billion in stocks last month, their largest one-month buy in history, while at the same time, a record 91% of fund managers believe U.S. stocks are overvalued. America's top banker is warning of the market falling and said he is more worried than others. And then, most rare of all, gold and silver are finally pulling back. We have one more day left of the week. Let's make it a good one.
We are seeing something that we have never seen in the history of the stock market. Yes, Mike, like you said in the intro, retail investors just bought $100 billion worth of stocks over the last month. We can actually see how much this increase past the recent high at the end of 2024. We saw the number also get close to that $100 billion point. But, just over the past month, seeing things rise this much and this drastically is definitely showing that retail investors are out there buying up the market. They're what are really fueling this overall rally. And a lot of people are starting to think that stocks and the market are becoming a bit overvalued. And especially whenever we look at this chart here, we can see that fund managers think this at an especially high rate. Again, the most in history. 91% of fund managers now believe that U.S. stocks are overvalued. What a time to be a trader.
Seriously, especially as stocks are at all-time highs, and we've been in one of the strongest bull markets in a very long time. And one thing that was especially interesting today is America's top banker, Jamie Dimon, the leader of JP Morgan Chase, warned of a 30% chance of a market correction. So, Tom, what's going on here?
Yeah, 30%. That was pretty insane. He ended up coming out today and saying that he thought that there could be a 30% chance of a market correction versus what markets are pricing in right now, which is a 10% prediction. Now, overall, that's obviously a pretty staunch stance, right? But he does have a lot of issues that he brings up here and things that he's worried about. Something that he's a little worried about here is, of course, inflation, right? Whatever the Federal Reserve is doing with interest rates and cutting rates, of course, lately has been playing a big role on markets. And, he is worried that there could be a situation where stagflation starts to take hold and recessions are, of course, what also worry him the most here. And he points to geopolitical tensions rising, fiscal spending, and the remilitarization of the world. Of course, Mike, we've been seeing a lot of stuff with Israel and Gaza lately, a lot of stuff with Russia and Ukraine. So there's been a lot of stuff over the past few years to obviously stoke some fears and uncertainty in the stock market.
Yeah, there's no doubt there is risk, but what's good is that even though he said that he is far more worried than others, even if we assume this 30% chance of a market correction, that still leaves a 70% chance of the market holding up. So that is good to see. But I will say, when we look back at real stats and, real historical returns, we can see that over the past 6 months, the S&P 500 rose by around 35%. This is the best 6-month rolling performance since the COVID days, the COVID recovery, I should say, and it is the second best performance since 2000. So we can see that this type of environment is very rare. In the past, whenever we have had a 6-month return this strong, the market has pulled back every single time, with the exception of the recovery of the great financial crisis and basically the COVID recovery. So it's safe to say this recovery is historical, and I don't think anyone should rule out a pullback.
Definitely not. Whenever I start to think about this, it makes me start to think, okay, whenever we get to this point, it is starting to become a bit overextended, right? I think a lot of people know that, but at the same time, we had these other two scenarios where the market kept going up. And I think it just goes to show that in the short term, continue to look at the market in possibly a bullish way. Don't be afraid to continue to ride that wave up. I'm sure a lot of people have been overly bearish over the past couple of months and have kind of gotten left in the dust as the SPY has continued to rise as much as it really has. So whenever I look at this data, I definitely I take it to heart, and I do think, okay, be careful for the future. We might see a pullback coming, but in the short term, still don't be afraid to follow where the money's flowing. And lately, that has been up, except for today, of course, Mike. The price action started to really shift today. We can see the SPY did post a red day, down 0.29%. Now, this really isn't that crazy. The SPY's average red day over the past year is is actually negative 0.55%. So was this more of a normal pullback day, or is this kind of sparking a larger pullback that might come into play? I thought it was a bit concerning today how the SPY was truly staying under key resistance around 672 to 672.50. I thought this was a pretty worrying sign that we ripped back underneath this, and I am going to be using this as an area for resistance tomorrow. If the SPY applies a lot of pressure tomorrow morning around this area and breaks through, I will look for the all-time high up at 674 to test, and ultimately for that to probably break. But I'm really not leaning for that. I actually thought it was, like I said, concerning that the way in which the SPY pulled back underneath this today, and I will be watching for a rejection and possible test of the low of day from today, close to 669.50. Now, this range around 669.50 to 670 has been critical. We've seen multiple bounces with SPY within this 50 cent to $1 range over the past few days or so. So be ready. If this turns over, we'll be applying pressure to the next key resistance or support down around 668. And of course, as we can tell, if that one breaks, we'll be falling down quite a bit, right? At that point, things will be getting pretty bearish.
Yeah, like the market's like stuck in a range right now where it has just been like kind of overheated for the past 6 months. Like we pointed out, it's up like 35% over the past 6 months, when normally the market only rises around 10% per year. And then like in a short-term sense, like you pointed out, it's stuck between a range between like 672 and 673. And if you want to, you can, boost that resistance range all the way up to the all-time high at 674. But there's also like some strong support levels below us as well. So the market's just kind of stuck right now. I think realistically, the market is in a very emotional time where there's like a lot of general euphoria, but at the same time, in the back of everyone's heads right now is like, when are we going to see the pullback and how bad is it going to be? So, I think it makes sense to be extremely adaptable right now. If we break through these lower support bounds, that will be a rough sign, like you said, especially considering we don't have too many close support levels below the 2 ranges you just listed. So that is like a big warning sign. Of course, it'd be great to see the SPY put more pressure on its recent highs and hopefully break through the all-time highs, but it has a lot of work to do. And, especially considering how it has been constantly getting rejected at this like 673 to 674 area, I think it'll take a lot of buying for us to get through that.
Exactly. I think that the amount of buying that it'll take to get through there will be too much for what is going on right now in the market, right? There's been a little bit of fear. Of course, we had Jamie Dimon today warning about a correction, which would be a 20% drop. I mean, now, of course, he said there's only a 30% chance, but whenever I look at market stats, I know that the market's been ripping a lot lately, right? And whenever we look, I know we looked at this stat earlier, but whenever we look at this stat that the market rose 34% over the past 6 months, we generally don't see the most bullish activity, especially 2 weeks later. I mean, to see the market only go green 20% of the time whenever looking 2 weeks later with this statistic is a pretty bad thing to say.
And another thing too is that those average returns are pretty rough, as it's around like minus 3.5%, which is like a decent move for a SPY. So yeah, let's definitely keep our eyes open in this sense. But Tom, it's not even just the market that's showing a little bit of weakness here. Gold and silver certainly are as well. I know this is super rare because gold and silver have been like the money printers over the past few months, but looks like things are shifting a little bit.
Gold closed down 1.85% with a very bearish day today. Silver actually made new all-time highs early on this morning, but pulled back after the market opened. And yes, Mike, this is all coming one day after Goldman decided to hike their price target. Yes, they hiked their price target yesterday up to $4,900 an ounce from $4,300 an ounce, which is actually quite the hike. But nonetheless, gold and silver are falling a little bit. And there was a little bit of news today that came out that might help support this overall theory. One of the biggest things was Israel actually said that the Gaza ceasefire is now in effect after doing a hostage deal. Now, of course, we're not going to get into the super specifics of this overall deal, but as we know, the Israel-Gaza situation has really been causing some fluctuations, possibly with gold and silver, as it sparked some of those global tensions and global fears. Nonetheless, gold did fall down today, 1.85%, and as we look at the daily chart, it was a pretty striking striking red candle as well. We've been going pretty much straight up since the middle of August, and we've never really posted a red candle this bad, at least on the close. So I find this a bit worrying, Mike. And, I know that we looked at this stat yesterday too, but the RSI got to the highest level on record. So there might be a little bit of overbuying going on here.
Yeah, like this frenzy with precious metals over these past few months has been insane, historic, and just beyond crazy. So, what comes with that are some red days, surprise, surprise. But I think when we look at this precious metal situation, I don't think it's something that should be like too concerning, but I do think for anyone who has like short-term positions in gold and silver, you're going to want to have some point to manage your risk at, because, it's easy to make money when you just, buy into like a super strong frenzy, but where things get dangerous is when the pullback starts to happen. So, depending on like your expected hold time frame, the shorter your hold time frame, the quicker you should be to cut. But yeah, it's definitely pretty volatile and crazy.
It really is, and it's something that a lot of traders are worried about because a lot of people have been going long, and also a lot of people have been waiting on the sidelines. So there's a lot of traders out there that are actually embracing this. They're like, bring it on. I hope it dips more so that we can buy in for the longer term. I'm kind of in that camp. I'm like, hey, I'll take more of a dip. That way we can buy it up and, get some better gains in the future. So it's not something to be too worried about, like you said. But this week has been pretty crazy. I know that we haven't had too much on the economic schedule or the economic lineup in general. For Friday and tomorrow, we do have Michigan consumer sentiment data preliminary for October set to hit, so keep that in mind. Powell did speak this morning, but didn't really say too much about the economy, and the market didn't move as that event happened.
Yeah, and there are 0 major earnings lined up too, so the economic schedule is all clear. So let's get right into the fun stuff, which are some setups and predictions. And a stock that is definitely on my radar is Boeing, and it is to the downside. So there was some news that came out today where basically Turkish Airlines just warned that it might cancel its massive 150 jet Boeing 737 MAX order, which is one of Boeing's biggest potential deals of the year. If talks with the engine supplier CFM don't improve, Turkish Airlines basically said that engine costs and maintenance terms are too high, and it's threatening to switch to Airbus instead. So if this deal falls through, it would be a huge blow to Boeing's like recovery narrative over the past year. Boeing already fell 4% off this news, and it's on my radar for a potential continuation tomorrow. Basically the more pressure that Boeing puts on its lows, the more that the shareholders of Boeing will be, tempted to sell out, and that is just like a little like short-term trade. It's not like a crazy trade where I necessarily expect Boeing to get down to like $180 per share, but I do think there is possible opportunity tomorrow and maybe even into early next week if we do see constant selling here. It's going to be a momentum driven situation. If Boeing gaps up by 2% tomorrow and starts putting pressure on highs, then there's really no reason to force a short on it.
Yeah, I personally like it, though, to the downside quite a bit myself, especially off of today's price action being down 4%. And it almost seems like on the daily chart, you could almost argue that this is like a dead cat bounce type of setup where we're seeing a little bit of consolidation before an ultimate larger turnover. And especially if that recent support breaks, things will be looking nasty out there. But with my first stock, I'm looking at MA. So Mike's watching BA, I'm watching MA. MasterCard is actually turning over in a similar way. Obviously, two totally different stocks, but MasterCard is approaching a recent support right around 260-250. Now, if we go to more of like an hourly chart, you can see just how critical that support has been over the past few weeks. So if we do hold this and we really fail to break down tomorrow, there's no reason to force it. But again, if we end up breaking down below this critical support, keep watching it down. I love the way it started turning over today, especially after all of those or the couple weeks of consolidation where the stock tried to start bouncing up, but ultimately got rejected right back down here.
Nice. All right. Another stock that is close on watch is IREN, and this setup is definitely more speculative. It's higher risk, higher reward. So IREN has been absolutely crushing it over this past year. Basically, this stock went from lows of around, you could say like $5 a share all the way up to highs of around like $65 per share. It's very overextended and it is strong, but we are starting to see more like weakening in the short term. It is really struggling around the $65 resistance level, and I like the risk reward playing it to the downside, but this setup is not something that should just be like blindly jumped into. We want to see like real weakness come into play. I know yesterday I was really eyeing up that support level around like $57 to $55.50 per share. We're pretty far away from that at this point, but even if we see like a break below that like $62 level, or maybe even that $60 support, those can be other good signs of weakening that can open up some bearish opportunities. It's a volatile stock. It moves strongly, which is good, but it could also be risky, if you don't have a proper stop loss set. So IREN is on my bearish radar. Understand it's a little bit more of a higher risk, higher reward setup though.
Yeah, if it starts to break under key supports, why not play it down? I'm sure that there could be a possible rejection here at this key $65 resistance, so I will be watching it closely over the next couple trading days, especially tomorrow. But with my next setup, I'm looking at Amazon to the upside. Yeah, I like the way that Amazon recovered up today. So early on this morning, Amazon was moving down pretty bad, and even at open, Amazon had a pretty bad drop-off, but I thought that their strength into close was very surprising and also something that made me have a lot more of a bullish lean for tomorrow's price action. Now, whenever I look at Amazon, they do have some massive sell walls overhead. So if we go to like an hourly chart, we can see that Amazon had been dipping in the short term, and there are some pretty key resistances here. 230 is going to be the first one that I watch for, and then the second one is closer to 234 and especially 235. So if we actually go to the Bookmap and the X-ray vision, there's 157,000 shares stacked up at 230 at the end of the day today. That'll be the first big target and big level to break through. Once we get through that, watch for 235. That's the next big level with 135,000 shares stacked up. They're $5 apart, so you could try to play the 230 breakout for the ultimate 235 test later in the day. That's what I'm watching for with Amazon, and hey, that was some good strength today, especially for that turnaround considering how bloody it was at open.
Seriously. So sounds good. Let's keep a close eye on these levels. And besides that, Tom, let's jump right into today's momentum plays. And with the first one, we have Rigetti Computing, ticker symbol RGTI, to the upside.
RGTI was insane today, closing up 8.9%. It posted its high of day up around $48.20. So if it can break $48.25, then watch it up.
With the next one, we have TeraWulf, ticker symbol WULF, also to the upside.
Up 10.5% essentially today. What a runner. If it can break out above $13.75 at its high of day, then watch it up as well.
And then with the last one, we have Open Door, ticker symbol OPEN, to the downside.
Open fell down 4% today. Unfortunately, they had a nice quadruple bottom, actually, if you look at a 5-minute chart, at around $8.12. So if it breaks $8.10, then watch it down.
Sounds good. So we have these 3 stocks on the radar for potential continuations tomorrow, if and only if they break through the levels listed. These stocks are volatile, so as always, prioritize protecting yourself above all else. Whether you trade one of these 3 stocks or anything else, focus on making smart, long-term oriented, disciplined trading decisions. If you need help with that, check out the Key Lessons channel and the StockedUp Discord. It is completely free. And besides that, Tom, let's jump right into today's $573,000 big money trade. And we are looking at ticker symbol HSBC. So this one got hammered pretty hard today. HSBC is a British bank and financial services group. Basically, its stocks hold off hard today because it announced a $13.6 billion deal to buy the remaining 38% of Hang Seng Bank that it doesn't already own. And what really spooked the market is that basically HSBC said that it's going to pause share buybacks for at least 3 quarters to fund this deal, which is bad not only because it signals less immediate rewards for shareholders, but it also raises concerns about how they are deploying their capital. So basically the stock got hit pretty hard today. The trade that the big money opened were the 60 strike put options for March 20th of 2026. This is a $573,000 trade. Not the biggest or craziest trade we've ever seen, but it is a bearish play. Looking at this situation, I would say it's a little bit more higher risk, higher reward than normal, given how far out of the money these puts are, which is good and bad. You know, if we see HSBC fall a lot, these puts can just absolutely crush it. And, you know, there is real fear in selling and profit taking happening here. So it's not out of the question. But again, these puts need a good move for them to work. What's good is that they have all the way out until March.
Yeah, there's a lot of time to this play, so if this does take a couple of weeks to a couple of months, you know, it could still end up doing pretty well. Again, if it starts to drop in the ultra short term, it could be a quicker profit-taking scenario, but again, you know, we would have to see a pretty steep drop-off in the short term again to get closer down to that $60 point. Either way, the quicker the better in the options game. That's usually what I say, right? If it happens quicker, I'd rather take that than it happening closer to the expiration. But I thought this was an interesting play, especially with the news behind it as well. And it's not every day that we get a British company that we're talking about out here either. And as we know, whenever companies buy other companies, it can definitely incite some downwards price action. And it seems like that's exactly what we're seeing here.
Yeah, so we shall see. Either way, very interesting, and I do like to see, you know, this strong momentum to start out. If you are new to the channel, welcome, and consider obliterating that subscribe button to get our videos recommended to you more often. Every single day, it takes us hours to make these videos, doing all of the research on the most important news, information, chart setups, big money plays, historical stats, and basically everything you need to know about the stock market every single day. If you subscribe, you'll get our videos recommended to you more often, so consider joining the Stocked Up crew in that sense. But we also want to give a giant shout out to today's member of the day, Jason, in the Stocked Up Discord, who had some very nice gains today with some SPY put options. So huge shout out to you, Jason. Keep up the great work going forward. Looking at the market for tomorrow, you know, we saw a little bit of profit taking for today. There aren't any major events lined up, which is good. You know, gold and silver are certainly at a critical point right now where, of course, they're up so much, but we are starting to see some, you know, respectable profit taking come into play. So it should be a good day. Thank you all so much for watching, and let's crush it in the market tomorrow.